Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Kauli. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Kauli, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Kauli.
Welcome to another edition of Premium Cashflow Podcast. Today, I'm delighted to welcome Sanjeev Silla from Infinity Investments to the show. Thank you, Sanjeev, for taking time. I appreciate you coming on to the show.
Thank you, Sakar. Thanks for having me on the show. It's my pleasure to be on the show.
Awesome. So for our viewers and listeners, Sanjeev has a huge IT background into healthcare. He's been working as a W-2 employee for a long time. He branched out into establishing his own company, serving healthcare industry. And then suddenly it dawned on him that, yes, real estate is a great place to be in, and of course place cash, and to scale you need to be in multifamily. So that diversion happened along with his friends and now fellow partners in his company. He has a $40 million portfolio and is definitely going up the scale. So we are here to learn more about his story and learn some of his prior experiences. And I think it will be a lot more engaging for listeners to listen to his story. So Sanjeev, without further ado, help us kind of get started in terms of, how you came about, what was your background, and how you kind of came in a big way in multifamily today.
Thank you for the introduction, Sakar. So in year 2010, I stumbled into a book called Rich Dad, Poor Dad. We used to live in Denver at that point of time. We just had a baby, my second kid, we was now 10. While I was reading the book, I understand that you need to have passive income. Real estate is a place to invest, but I was not sure where to start, how to start. Right? We relocated to Dallas year 2011, thinking that I used to work for Accenture at the time. I can travel anywhere in the country at the same time. The population growth and job growth and the way Dallas going at the time, maybe 6 million population. I thought that's the right place to move, right? Relocated to Dallas. Things really went well. I think if you look at Dallas population, 7 million. I think in less than 7 years, we have 1 million people more in Dallas. That's how I came to Dallas. Then with the Rich Dad book, I was thinking that I need to start buying homes. Even before that, I was thinking of the stock market. I know that I don't have much control on that. I did not do well. I was looking for something which I can control. That's where I was thinking about single family, but again, we know that there's not much economy of scale. Then I went into multifamily, where the main thing is economy of scale, and we can easily scale up. That's the reason I moved to multifamily.
Sure. Now, Sanjeev, how did that realization also came about that you want to be specifically in multifamily? Why not buy a group of single family homes and things like that and kind of come that way? What was it about single family that you really wanted to be, and kind of give us a sense of, how you educated yourself that, yes, multifamily is perhaps the right way to move forward into it?
So I know that it took me 7 years to buy my home. Sure. And you know that something goes wrong, it takes a long time to fix. It could be toilet, it could be drywall painting. I had to call any man. To be frank, we're busy life, we don't have much time, right?
Sure.
And also we need to leverage our expenses. And you can buy a home. We cannot buy a home next to each other. There, you cannot leverage the expenses. If you buy a 60, 70 units. That's where you can leverage the expenses. And also you can probably bring in a professional management company. They can manage for you, and for you just manage the management company. That sounds like a real business more than the cash flow. I want to build a business, right? And multifamily is a place we can invest in single family,
Mm-hmm.
maybe few $100, maybe based on mortgage. But the multifamily is more than cash flow. So building a business. That's
Sure.
what attracted me, Satya.
I see. I see. Thank you. So now, your deals, Sanjeev, are all in Dallas. Am I correct? You said?
Yes, that's correct.
Okay, okay. So now Dallas has been growing, Sanjeev. We are obviously kind of seeing that the prices on a per unit basis are definitely slowly inching up. What used to be 3 years ago, now coming back into 2019 and 20, you are seeing that the deals have been going pricier and pricier, right? So for someone listening, can you maybe help us, give us some
Sure.
underwriting principles as to, how you underwrite, or what are sort of your, sort of your favorite things that you always look for in deals?
Absolutely. Before that, my thoughts, let's going back to the question, the price is going up.
Sure,
At the same time, we need to realize that the rent's also going up, of course, till
sure.
COVID, right?
Hmm.
And as in the way you value the multi-family is different from single family. So the more income you make, that means the
Sure,
value will go up.
sure.
So price will go up. For me, prices, maybe that's not a big deal, as
Hmm.
long as numbers make sense, where I see an opportunity increase my value. That's
Sure,
right.
sure, sure.
And going back to second part of the question, the underwriting base, the first thing is, it's all about location, hyper local. Really, it's all about hyper local. The
Sure.
first thing when I get a deal from a broker or somebody, I look at the demographics and
Hmm.
what is their median income. If his median income is anywhere between less than $40,000, probably I will not touch. I
Okay.
don't even spend time. Even nowadays, given the COVID, we don't know always the economy going into in the next 2-3 months or
Sure.
next year. So I'm thinking to make criteria. I will look at least $45,000 of median income within a mile, not 3 months, within a mile. That's number
Okay.
one.
Hmm.
Number two is based on my experience, probably I will not look for chiller, flat roofs,
Hmm.
no boiler, preferably no boilers. This is
Sure,
a basic criteria. And next one is I will see if there's an opportunity for the value add. That's the main thing,
sure.
because it's as you know, that's, you've been doing for a long time. Um, we need to, how we can increase the value by force appreciation.
Sure.
One of deal which in Arlington, uh, last month I leased 10 units. Can you believe? And my NOI is increased by 30% because
Wow.
10 units, we increase the premium. I mean, each one we increase by 170 to $200. I mean, it's a huge increase. So
Sure, sure,
the number four is what you call deep value or value adds.
sure.
This is a basic criteria. I look into anything, and also I will look into it's close to any highways. We're talking about, if you look at my property, it's all close to school, walkable to elementary school, high school, middle school, and I have one deal is next to big hospital. I mean,
Okay.
you cannot go wrong. Even of course,
Sure.
economy is from the big picture, but again, as I mentioned earlier, it's all hyper local. It's all about location, location, location. So,
Absolutely, absolutely. Thank you for sharing that. Now,
mhm.
speaking of value adds, right? What sort of value add you look at, Sanjeev? Like, obviously, we all know that value add can be, extremely heavy lift, where you are doing a lot more renovations and things like that. Or are you more towards into stabilized properties needing some light renovations that we call like a light value add? Are you doing something similar, by the way?
So basically, again, as you mentioned that I look for at least 90% occupancy. If not, I won't go because I don't want to go at this point of my career, go to 50% occupancy, turnover. Maybe that could pay off a long time, but right now I want to focus on 90%. The reason is 90%, the loans from the government agency, you'll get a loan easily, which is non-recourse loan. Okay,
Sure,
right?
sure.
And I do value as I was again an example. I'm spending anywhere between $8,000 to $13,000. The reason is that some of the demographics you cannot do. First, you need to look at the demographics, what they're looking, right?
Sure.
I have some properties in Calgary where I don't do grand upgrade, but in this case, I'm doing grand upgrade. I also open the kitchen and
Mhm.
painting, everything is renovated. I'm spending anywhere between $8,000 to $13,000. It's all about demographics where you can.
Sure,
Right
sure,
now, we have everything is lease, pre-lease, everything,
sure,
and
sure.
there's nothing to do. So it's all about location and demographics.
Sure,
Sika.
sure. Thank you. So now, Sanjeev, you are a group of four people within your company. Can you maybe describe sort of your strategy of selecting various partners and kind of seeing that who can do which role, and you can align their strengths to different parts of the business that need to be done.
Sure.
Can you share your thoughts on how to go about forming the partnerships?
And again, I know we talked briefly before the call. It's all about teamwork. Make
Sure,
sure that you have a good team and those we can supplement your skills, right?
sure.
In my case, when I joined 2 or 4 years back, where I wanted to do multifamily, I have no experience with multifamily.
Mhm.
So I found somebody we has the same thought process, like-minded. At the same time, we have multifamily experience.
Sure.
That's number one, right?
Mhm.
Number two is uh, I wanted to understand each and every aspect of multifamily, not just getting a deal, not just operations, raising the money. I just want to make sure that everything I can understand all aspects so that I can be independent in the coming years, right?
Sure,
That's my goal. It's all
sure,
mutual, right? And
sure,
win-win.
sure.
And so in my case, I got the deals and underwrite the deal. First two deals, my partners told they will take care of running the operations. Good,
Mhm.
that makes sense because I didn't have experience.
Sure.
And I trusted them, I relayed them. They took care of all the day-to-day operation of the first two properties. But
Mhm.
on third deal, I wanted to make sure that I will take care.
Sure,
So
sure.
I was focusing in getting the deals and Park City, which I closed 8, 9 months ago. Now I'm taking care of day-to-day operations, right? And one of my partners, Paulo, is investor relations and communication with the investors, right?
Mhm.
So,
Mhm.
but I focusing on getting a deal, acquiring a deal, underwriting the deal, and how to close a deal. Now I'm also taking care of how to take care of the operations.
Sure, sure, sure. Thank you for sharing that detail. Now,
Sure.
Sanjay, for new investors who are looking to, invest or perhaps looking to get into multifamily, what can you advise? Like, what could be some of the first few steps they can take so that they can, kind of come into multifamily investing? What can you share your advice about that?
So definitely, so for me, being a passive, what's your goals, right?
Mm-hmm.
First, understand what you want from finance perspective. Then, more than the deal, to me, the people we are sponsoring is very, very important for you. That's what my look is. You need to trust the people more than as like for me, a lot of the investors invest with me, family and friends. Probably they never seen the deal,
Mm-hmm.
but they rely on me. They
Sure.
trust me. They
Mm-hmm.
trust my partners, their friends. So that's number two. Number three is you need to have basic understanding about property. What kind of cap rate they're looking, what kind of location, and
Mm-hmm.
look at the demographics and what kind of returns they're giving to us, right? And
Sure.
also making sure that what kind of what's going to GP, what's going to LP. I think
Mm-hmm.
this is the basic things. I know nowadays, so people say that some of the, this is a question always comes. So people say, hey, I cannot invest in the cover funding. I can do online. Why should I invest with you? Right? I told them that, investing with me is like buying from something from Costco versus buying something from Kroger, right?
Sure.
So it's all about, see, if you're investing in online, probably you don't have much customer service.
Sure.
Probably you never seen that sponsor. But in my case, you're seeing me, you can control me. I mean, you can ask me any question. It's
Sure.
very transparency. I think when compared to crowdfunding, I think that's what I think I'm the best. That's what I give my perspective. But it's up to you to make a decision because it's a lot of money, right? You're
Sure.
giving the money means even I tell to all my friends and family, thank you for trusting me, but there's a risk here. I
Sure.
cannot guarantee any returns. There's an opportunity you may lose all the money. But
Sure. Sure.
please talk to your wife, talk to your family before you make a decision, and then only I'll take the money from them.
Sure, sure, sure. Makes sense. Makes sense. Thank you for bringing that up. Now, Sanjay, speaking of all the returns and your first deal and things like that, can you maybe perhaps share some details, your first deal size, how it came about, and also perhaps, was it like, on market or was it through brokers and things like that?
Sure. I believe in relationships. It's a multifamily. I know. I think I was talking about the 80-20 rule.
Mm-hmm.
80% of deals actually bringing to you by brokers, 20% of the brokers.
Sure.
Make sure that you have relationship brokers. The first deal is in Carlton, which is 68 units. I got for $5.5 million approximately, with 6.97 cap a few years back. It's a flat, it's a picture though, it's a great location. The mean income is actually $70,000 within that 1 to 3 miles.
Very
and
strong.
We have very high school and middle school, elementary school, everything is walkable. This is looks like the broker initially wanted to take as an assumption, but some people did not work, and later on it came as a new loan. So I was the first one to get into that one. I know the broker. I've been touring many properties, and you know what I'm looking, because since first deal, I want to be a little conservative, not $5 to $6 million. And I got a call. I seen that property, and we quickly underwrite the deal. It makes sense, and more than that, it's like 10 miles from my home.
Okay.
And it's a great location. And okay, why not? In fact, I'm putting it on the market right now.
Okay.
I've been getting a call to get, because people wanted to have that asset, as location. We wanted to have a long-term planning. So that's my first deal. It's called New Orleans.
I see. Thank you. So share your best advice, Sanjeev, as far as, a lot of like new investors are watching the show and trying to understand, how to sort of safeguard themselves and things like that. Can you share some of your best advice in terms of, how to stay disciplined and how to be, sort of in an always active mode in this multifamily business?
So again, stay focused, self-disciplined in underwriting the deals. Don't be crazy for something, right? Making sure that it's more than our money, our friends and family's money. That's always keep in my mind, right? Coming to best practice, it's all about location, as I mentioned that, right? And number 3 is, and at the same time, interest rates is very low nowadays, right? Low 3, which is a great asset, and look at the cap rate too. If somebody buying it I got some of my deals, like first one like 7 cap, 6.5, 5.5. Of course, it's a class B deal. If somebody asks me to buy at 4 cap, probably I will not buy. If it's a 5, 6 cap, maybe I'll think about that. But given this COVID season, to be honest, I don't see that impact in my deals so far. Maybe delinquents for one property a little bit up, and one property I've been issuing the distribution. Although I promised 9, I'm giving 5 to keep the cap with me. At the same time, we don't know what's coming next 2 months, right? Unless it's a big discount on the price, I can buy. But I don't want it to. I'm keep underwriting the deals, but I don't want to give an LOI. I don't want it to buy anything at least for next 2 months. I just want us to wait and see. And of course, as you know, that if you look at 2008, 2009, the best deals came after 1 year, right?
Absolutely.
Same thing. Patience is a key here. As long as you have the time, discipline, and don't be crazy in the beginning of deals. It's not about how many deals you wanted to make. It's all about if the numbers are working or not.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.